U.S. social media giant Facebook, FB, has long been an investor favorite as the share price has grown 600% since the company went public in 2012. Facebook stock gained 31% in 2020 as technology stocks rallied and Facebook's engagement increased during the COVID-19 pandemic. Today, we'll look at 5 Facebook stock price predictions. Number 5. The coronavirus pandemic continues to drive Facebook engagement. One of the so-called FANG stock, along with Amazon, Apple, Netflix, and Alphabet's Google, Facebook is among the largest companies in the world by market capitalization. The company reported 2.74 billion monthly active users as of September 30th, 2020, an increase of 12% year over year as people around the world increasingly turn to online entertainment and communication during the COVID-19 crisis. Dave Wenner, Facebook's chief financial officer, said in the company's third quarter report, "We believe the pandemic has contributed to acceleration in the shift of commerce from offline to online, and we experienced increasing demand for advertising as a result of this acceleration." He added, "Considering that online commerce is our largest ad vertical, a change in this trend could serve as a headwind to our 2021 ad revenue growth." Facebook reported 22% year-on-year growth in its third quarter advertising revenue and expects its fourth quarter growth rate to be higher, driven by continued strong advertising demand during the holiday season. Facebook stock started 2020 at $208 per share, falling below $150 per share during the broader stock market sell-off in March. The price trend then turned positive as the stock rallied over the summer to reach an all-time high of $304 per share in late August. Number 4, Facebook earnings. With 2.8 billion monthly active users, a meaningful fraction of the global population uses Facebook. Among the 6 most popular social media platforms in the world, Facebook owns 3: WhatsApp, Instagram, and, of course, Facebook itself. With the pandemic continuing to rage across the globe, people are turning to Facebook to stay connected with their loved ones. Considering these factors in Facebook's favor, it should come as no surprise that the company fired on all cylinders last quarter, beating fourth quarter earnings and revenue expectations. Facebook earnings easily surpassed fourth quarter estimates. The FANG stock earned $3.88 per share, up 52% from a year ago and 69 cents ahead of the consensus. Revenue surged 33% to $28.1 billion. The accelerating revenue growth came despite a further dip in daily active users in the U.S. and Canada to 195 million, down from 198 million in quarter 2. Worldwide daily active users rose to 1.845 million on the Facebook platform versus 1.82 million the prior quarter, led by growth in the Asia-Pacific region. Number 3, price predictions. Where do analysts expect the share price to be? A total of 50 analysts cover Facebook stock. Of those, 39 rated as a buy. 4 have an overweight rating on it. 5 have a hold rating on the share, and just 2 rate it as a sell. As one of the more popular U.S. stocks, 43 analysts have issued Facebook stock predictions and ratings in the past 12 months. The average 12-month price target is $298.45 per share, with a low estimate of $195 and a high of $350 per share. That would indicate an upside of around 11% from the current share price. Morgan Stanley upgraded its Facebook share price forecast on January 5th to $340 per share from $315 per share previously, as it expects a check-mark-shaped recovery for the macroeconomy. Its Facebook share forecast puts the price at $279.85 per share in February 2021, $323.66 by December 2021, and $377.46 by December 2022, reaching $538.70 by December 2025. JP Morgan has a Facebook stock price forecast of $330 per share with an overweight rating. The bank does not expect the FTC and state lawsuits to have a major impact on the company, arguing that social networking has never been as competitive as it is today. Given the popularity of Snapchat, YouTube, and TikTok, YouTube has 2 billion global users and TikTok has 689 million monthly average users. JP Morgan said in a recent analysis, "We do not forecast any divestitures in our model and continue to expect Facebook to grow ad revenue plus 20%. FXN year-on-year to $83 billion this year. We believe a breakup is unlikely and see this as a buying opportunity." Number 2. Addressing threats to Facebook. Nonetheless, Facebook stock could still face significant headwinds. One concern is renewed antitrust scrutiny, as the Federal Trade Commission is reportedly close to formally filing suit against Facebook. Since the company wields tremendous market power over advertisers in the social media space, such suits remain an ongoing worry. Indeed, Facebook is dominant in the social media industry. However, because Facebook never charges users to use its platform, it could be difficult to prove an antitrust accusation. Another significant concern is its long-term growth prospects. In the latest quarter, monthly active people rose by 14% to 3.2 billion across all Facebook-owned applications. Since the world has about 7.7 billion inhabitants, Facebook connects almost 42% of the planet's population. Considering that a large percentage of the remaining 58% lack internet access, user growth could soon slow to low single-digit levels. Facebook has addressed this limitation by developing new products, namely Portal and Oculus. Portal is a video calling device for the home with Amazon's Alexa built into it. Oculus is a virtual reality (VR) headset. Facebook bought Oculus in 2014 but has just now integrated it with Facebook. Of the two, Oculus may offer more potential. Number 1. Facebook stock. Is it a buy? A few cons are working against Facebook, but its biggest pro is how well established it is. Facebook stock has a market cap of $736 billion. That makes Facebook stock the 6th most valuable company on the S&P 500 index. 43 Wall Street equities research analysts have issued buy, hold, and sell ratings for Facebook in the last 12 months. There are currently 1 sell rating, 4 hold ratings, 37 buy ratings, and 1 strong buy rating for the stock. The consensus among Wall Street equities research analysts is that investors should buy Facebook stock. Facebook has proved its mettle during an unprecedented economic turndown. Facebook stock boasts a decent 80 IBD composite rating. The composite rating combines several key fundamental and technical factors into a single score. IBD research shows all-time stock winners often have a composite rating of at least 95 near the start of big runs. It's dangerous to bet against Facebook stock, even as it faces a long antitrust battle. Yet investors who want to bet on Facebook should wait until it again demonstrates its resilience by reaching a proper buy point. Moreover, while saturation could become a concern in a few years, advertising revenue growth remains above 20%. However, given the valuation and continuing growth prospects, Facebook offers tremendous value. Users will probably still give Facebook a like, which is exactly why investors should as well, at least in the short term. Facebook is keeping much of the world connected during a global pandemic. Though near-term headwinds may slow the company's growth, at least in North America, Facebook isn't going anywhere anytime soon, and global user growth numbers are still impressive. Its attempts to diversify into VR are also worthwhile and positive, given the company's heavy concentration in advertising. Although it seems increasingly unlikely that Facebook can avoid antitrust scrutiny, and Apple is indeed a meaningful competitor these days, Facebook remains a stock to reckon with and is a must-own for long-term growth investors. Do let us know in the comment, is Facebook your favorite app or not? Would you like to buy Facebook stock? Please subscribe to The Stock Advisor. Thanks for watching.